Welcome to the Nifty Noon Podcast, your shortcut to being truly well-informed. This week, we are plunging right into a period that, well, dramatically sped up how traditional finance, TradFi, is merging with crypto. It's been quite something. Yeah, the last few days, September 2nd to the 5th, 2025. It was just a whirlwind. We saw regulators finally give a major green light for TradFi giants to really get into crypto. We saw huge players, like Stripe, launching their own blockchains. Even the Trump family expanded their pretty significant crypto footprint with new tokens, new stock debuts. So our mission here in this deep dive is simple. Take the key nuggets from the Nifty Noon newsletters, plus that detailed briefing doc you shared, and just break it down so you can quickly get what's shifting and, importantly, why it really matters for finance. Okay, let's jump right into September 2nd. First up, this really intriguing debut of the World Liberty Financial Token, WLFI, endorsed by the Trump family.
Yes, WLFI. That certainly made some waves.
It really did. Launched on major exchanges, Binance, OKX, Kraken, and the volatility was, well, significant. It jumped over 17% initially, hit about $0.33, then pulled back to around 24 cents.
Right.
At its peak, it was briefly the 26th largest crypto asset. Circulating value hit, $9.1 billion?
And the implied fully diluted value, the FDV, was north of $30 billion.
Quite the debut numbers.
Exactly. But what really stood out, and we highlighted this in our newsletter, was the unlock schedule.
Yes, that part's interesting.
Only 20% of early investors' tokens could be sold immediately. The other 80%, subject to a future governance vote.
And that low float mechanism, that's where the debate really starts.
Okay, unpack that. Low float.
Well, on one side, you've got analysts saying, look, this is pretty standard. It's a way to manage sell pressure right after launch, stop a huge dump of tokens hitting a market all at once, a stability measure.
Makes sense. But there's another side.
There is. Others argue that limiting the supply that's actually tradable right away, well, it can make the price easier to pump.
It creates a kind of artificial scarcity, potentially driving up the value. So the question becomes, is this smart tokenomics for the long haul? Or is it a strategic play that might, maybe intentionally, maybe not, help manipulate the market?
That is a critical distinction, isn't it?
Absolutely.
So for you listening, beyond just the headlines and the famous name, what's the takeaway from seeing this kind of structure, this kind of launch?
I think it shows how personal brand equity is becoming a massive driver in crypto capitalization, maybe even bypassing some traditional checks and balances you'd see elsewhere.
Right.
So for investors, it really highlights, the need to look beyond the hype, scrutinize the token distribution, the unlock schedules, the real long-term goals of the backers, especially when a big brand is involved.
Good advice. Now, WLFI got a lot of attention, but September 2nd was busy elsewhere too, things pointing to bigger trends.
Definitely.
We saw Ethereum ETFs, for instance, pull in nearly $10 billion since early July. That shows pretty strong investor appetite, and not just for Bitcoin.
A broadening interest, yeah.
And building on that, new ETF filings for XRP and Solana hit the SEC's desk. The market's clearly pushing for more regulated crypto options.
Which fits the whole institutional adoption narrative.
It does. And speaking of adoption, tokenized real-world assets, RWAs, on Solana jumped past $500 million in total value, a new all-time high.
That's significant. It shows blockchain being used for more than just trading, actually bridging traditional assets onto the chain. More liquidity, more access.
Definitely. Okay, let's move to September 3rd. The big news here, again flagged in our newsletter, was this landmark joint statement, SEC and CFTC.
Oh yeah, this was huge. A real game changer.
It really felt like it. The statement basically said explicitly that registered national exchanges are not prohibited from listing and trading certain spot crypto assets.
No ambiguity there.
None. And this came out of the SEC's Project Crypto and the CFTC's Crypto Sprint. It felt like a clear shift away from, the often kind of adversarial stance we'd seen before.
It's being widely read as a definite green light.
For who, specifically?
For the big players. NYSE, NASDAQ.
Oh.
The established exchanges. It signals they can likely get into the spot crypto market, probably starting with Bitcoin and Ethereum, directly for their huge client bases.
Wow.
And if you connect that to the bigger picture, this coordinated move seems designed to finally end that perceived turf war between the regulators.
Which has caused so much uncertainty.
Exactly. It de-risks crypto significantly for traditional money managers, for institutional capital that's been waiting on the sidelines because of regulatory fog.
So it creates a more stable foundation.
Precisely. A stable, predictable foundation for innovation, for growth. It paves the way for direct investor access through the same channels they use for stocks and bonds. trillions of dollars in potential inflows.
So for you listening, this means getting into crypto might soon feel as familiar, maybe as secure as trading regular stocks. That's massive for market maturity.
It really is.
From your perspective, what's the most immediate, tangible impact you see this having in the next, say, year and a half?
I think the most tangible thing will be a noticeable surge in institutional money coming in. Pension funds, endowments, corporate treasuries. They've been hesitant. Now, with clearer rules, they can allocate serious capital.
And that means?
Well, it's not just about prices going up, though that might happen. It's deeper liquidity, more sophisticated financial products built on crypto, and just this overall legitimization that pulls crypto further into the main financial system. Expect new derivatives, structured products, maybe even a convergence in how digital and traditional assets get managed.
Interesting. Okay, so beyond that huge regulatory news, September 3rd had other things going on too, right? More institutional confidence, tech progress.
Yes, definitely. Sharplink, for example. They made a massive Ethereum purchase.
How much?
39,008 ETH. Brought their total holdings to over 837,000 Ether, worth around $3.6 billion at the time.
Wow.
And then you had Jack Ma's Yunfeng Financial Group buying 10,000 ETH as a reserve asset.
So institutions aren't just buying Bitcoin anymore. Ethereum's clearly on their radar too.
Absolutely. Diversification is happening. They see Ethereum's role growing. And on the tech side, Solana's big Alpenglow upgrade passed its governance vote. Huge approval rate.
Alpenglow, what does that do again?
It's aiming for incredibly fast block finality, 150 milliseconds.
150 milliseconds. That's practically instant confirmation.
Pretty much. Crucial for high-speed uses like payments and just scaling the network for future demand.
Got it. Okay, let's shift gears to September 4th. Another big day, another Trump family development. This time, American Bitcoin Corp, ABTC.
Right, the mining company. Their NASDAQ debut.
Exactly. Backed by Donald Trump Jr. and Eric Trump. And talk about volatile, but ultimately a successful first day, you'd say.
Well, the stock surged like crazy, hit $14.52 at one point, then closed up 17%, around $8. Trading was halted 5 times.
5 times. Wild.
Yeah. And the Sun's stake, roughly 20%, was worth about $1.5 billion at the close. Peaked over $2.6 billion during the day.
Incredible numbers. And their strategy is interesting too, isn't it, ABTC?
It is. It's a hybrid approach. They mine new Bitcoin, obviously, but they also use their corporate treasury to buy and hold Bitcoin. They'd already stacked up over 2,400 BTC, worth nearly $260 million.
Now, this one, maybe unsurprisingly, drew some criticism.
Yes, questions about potential conflicts of interest, given the family's political connections and the administration easing crypto regulations.
Though Eric Trump pushed back on that.
He did, stating his father wasn't involved. But it absolutely highlights this growing intersection of politics and crypto, and the intense scrutiny that follows these high-profile ventures.
It really shows how crypto is becoming part of the mainstream power dynamics, leading to these debates about influence and transparency.
Exactly.
But setting aside the politics for a second, that hybrid strategy ABTC uses mining and holding in treasury, that's quite innovative for a public company, isn't it?
It really is.
How might that model, inspire other traditional companies thinking about getting into crypto?
I think it gives them a clear blueprint. Lots of companies have cash just sitting there, losing value to inflation. Right. ABTC shows a way to actively participate in crypto's growth through mining, while also potentially hedging their balance sheet with Bitcoin as a non-sovereign asset. It could be especially attractive for energy companies, maybe, using excess power. It's definitely a more proactive treasury strategy than just buying BTC on the market.
Makes sense. September 4th had other interesting moves too. Ondo Global Markets went live.
Yes, offering tokenized U.S. stocks and ETFs on-chain. A big selection, apparently. Another step towards bringing traditional finance onto the blockchain.
Enhancing liquidity access. Okay.
And Ray Dalio weighed in.
He did. Called Bitcoin an attractive alternative currency. Cited the limited supply, potential dollar inflation, classic arguments, but coming from Dalio, that carries weight.
It certainly does. And Galaxy did something groundbreaking, too.
First publicly traded company to tokenize its own SEC-registered shares on a public blockchain.
Wow. Blurring the lines even further between TradFi and crypto offers a whole new model for corporate ownership, potentially liquidity, too.
Okay, finally, let's hit September 5th. And this feels like another potential earthquake. Stripe and Paradigm unveiling Tempo.
Yes. This could really change the game for on-chain payments.
So Tempo is what exactly?
It's a layer 1 blockchain, like Ethereum or Solana, but purpose-built specifically for payments. High performance, especially for stablecoins. They're aiming for over 100,000 transactions per second.
100,000 TPS, that's huge.
It is, and a really key feature for users.
Yeah.
You can pay the network fees, the gas fees, directly in stablecoins.
Oh, that's smart. No need to hold some volatile native token just to make a transaction.
Exactly. Big user experience win. And the institutional interest seems immense. Look at the design partners.
Who's involved?
Visa, Deutsche Bank, Shopify, DoorDash, even OpenAI. Heavy hitters across finance, e-commerce, tech.
Okay, that lineup signals serious intent.
Absolutely. This is Stripe's biggest move into blockchain infrastructure yet. And it's a massive validation for crypto's role beyond just trading.
Because it's tackling enterprise payments directly.
Right. A huge area that maybe hasn't been the main focus for some other blockchains optimizing for DeFi or NFTs. This could genuinely pull a massive chunk of global payments onto the blockchain, a fundamental shift.
Truly transformative potential. So
Yeah.
for you listening, this isn't just abstract tech news. It could make your everyday digital payments faster, maybe cheaper, definitely more secure using blockchain tech.
That's the promise.
Looking at the big picture, what impact could something like Tempo have on, say, Visa or MasterCard, especially with Visa being a partner?
Well, it's probably less about replacing them outright and more about evolving them, augmenting what they do.
Okay.
Visa being a design partner is very telling. They see where things are headed. Tempo could let these giants offer faster, cheaper, more programmable payment options to their clients, using blockchain strengths but keeping their own trusted brands and compliance frameworks. We might see a hybrid future, traditional rails and blockchain networks working together.
A hybrid future. Interesting. Okay, September 5th also had a few other notable items. SEC Chair Paul Atkins reiterated crypto regulation is a key priority.
Reinforcing that commitment to clarity we talked about earlier, consistency there.
And an interesting stat, Ethereum actually had more spot trading volume than Bitcoin last month. $480 billion versus $401 billion.
Shows Ethereum's growing market weight and liquidity. It's not just Bitcoin's show anymore.
Definitely not. And another big number, public companies now hold a collective 1 million Bitcoin.
1 million BTC, that's 5% of the total supply. A huge indicator of institutional conviction and its long-term value.
It really is. But a reminder of the volatility, our newsletter pointed out that both those Trump-backed projects, WLFI and ABTC, dropped over 20% on this day.
Yeah, even high-profile assets aren't immune. The market giveth and the market taketh away.
Right, indeed. So, looking back at this whole week, wow.
It really felt like a turning point, didn't it? Particularly on the regulatory front in the U.S.
Absolutely, a clear shift.
Moving away from uncertainty, from that sort of perceived antagonism, toward actually building clear rules of the road. That's not just paperwork. It unlocks capital.
Right.
Massive amounts of capital potentially flowing into spot crypto now.
And it's not just the rules changing. The actual adoption is deepening. Right?
Across the board.
Yeah.
You see Tempo launching with partners like Visa and Deutsche Bank. You see public companies piling into Bitcoin and Ethereum. Institutions are not just dipping their toes in. They're building infrastructure, diversifying holdings.
Yeah.
They're all in.
Yeah, they seem committed now.
And then you have the political angle, like with the Trump ventures. It brings crypto into the mainstream conversation, for better or worse, but also raises those crucial questions about influence and conflicts of interest.
Right.
But alongside that, you see smart diversification. Companies realizing it's not just Bitcoin. Ethereum matters. Tokenized real-world assets matter. It's a broader portfolio approach now.
And all of this is happening because the underlying tech, the infrastructure, is maturing rapidly.
Exactly. Solana's Alpenglow upgrade, aiming for near-instant speed, new financial products connecting TradFi and crypto, purpose-built chains like Tempo. The ecosystem feels ready. Ready for bigger scale, more complex uses. Ready for prime time.
So wrapping this all up, what does this whirlwind week mean for you, our listener? It really feels like more than just headlines. It was a significant leap, maybe an irreversible one, in how crypto gets woven into the global financial fabric. We've clearly moved beyond niche tech. It's widespread institutional buy-in, regulatory engagement. Digital assets are becoming undeniably integral to finance.
Yeah, I agree. And the big question now isn't if crypto changes finance anymore. It's really how fast these two worlds, TradFi and crypto, become kind of indistinguishable.
Right.
And what completely new things, new instruments, new opportunities will emerge from that fusion. As you think back on this week, what really stands out to you is the most impactful shift. Something to ponder.
Definitely something to ponder. We really hope this deep dive gave you a valuable shortcut, a way to get informed quickly about these huge changes shaping our financial future. For more daily insights, more updates, please do follow our newsletter, Nifty Noon. We're on X, we're on Substack. Links are right there in the show notes for easy access. Thanks so much for tuning in for this deep dive.